This is how I frame my buyers each and every week. So first, I can see that we've had this clean accumulate, manipulate, distribute on the weekly time frame. We're clearly looking to continue higher and trade with this trend. We also have left relative equal highs at all-time highs. So I can see here that we have this weekly BISI. That's the first thing I'm looking at. I can also see that NQ has taken 2 weeks ago's previous week low, whereas ES has failed to. From that, I'm assuming that to be a protected low and that we're going to likely run for all-time highs, as it's all relative equal highs and low resistance liquidity. From that, I'm going to scale down and I'm going to go down to the daily time frame. So I can see we have the SMT off this low. I'm going to remove that to make it cleaner. We can see we've very clearly diverged between these two lows. We've then created a clear rejection wick and we've displaced opposing our SMT. That's further confirming this to be our protected low, and then we're going to run to these highs. Scaling down to the 4 hour gives me even greater precision at determining reversal points. So here we have a very clear 4 hour rejection block wick, of which we've very cleanly traded inside of when we traded inside of our weekly, putting in our weekly SMT. So this is very prominent reversal. From that, we've seen that we've had this V shape and then we have these relative equal highs stacked at our all-time high. So from that, I'm going to assume this to be a market maker buy model, which will become clearer as I zoom in further. But I would see this to be our original consolidation. We leave the range, we come back in. That's our low risk inside of that rejection block right there. And then we've traded outside. We've had first stage accumulation, run lower, second stage reaccumulation. We've then put in a low near our prominent swing low, and then we've ran that being our smart money reversal. We've then V-shaped, creating high time frame change in state of deliveries and a big inversion just over here. So these are the sorts of things that I'm going to be looking at as we trade towards these highs. I'm going to be measuring out 0.5 of our swing and be looking for retracements inside of that and bullish SMTs inside of my prominent PD arrays to then get on side. Now scaling down to the hourly time frame, I like to look for standard deviations. In this case, I'm going to draw it up from our swing low that put in the weekly SMT to our change in state of delivery. In this case, we can see that we have 2 to 2.5 standard deviations, aligning with completing this lower time frame market maker buy model, whereby we have all this LRL generated that trades us up into a mostly unmitigated inefficiency. So I'd be looking for this inefficiency to be rebalanced just above this high. Aligning our standard deviations, I would see this high to be our main drawn liquidity as of now. Now that I've identified we're clearly on the buy side of the curve, how would I get on side with this? As we're accumulating while leaving relative equal highs, I would like to see us manipulate down into either this 15-minute unfilled with no bottom wick or into this clean rejection block right here. The reason I'd be looking at this rejection block is because of premium and discount of this swing. So our discount array would actually be the rejection block rather than this unmitigated gap, because this unmitigated gap is our premium array. However, because we are on the buy side of the curve and we could be starting to fulfill second stage redistribution, you can't always expect as deep of a retracement as to in this rejection block. So how I would be framing getting on side with this would be looking for some form of prominent SMT inside of this 15-minute unfilled and then a clean V shape to confirm that this is an accumulate, manipulate, distribute higher. So I'd be looking for an SMT and then some form of inversion or CISD to confirm that. One final thing that I'll point out is that I'll typically look at regular trading hours structure. So I can see that on regular trading hours, we have this clear regular trading hours gap right here that will be filled at some point. However, because we are on the buy side of the curve and we also have this large regular trading hours gap over to the left here, I'd be looking to see this one get partially or fully filled before our retracement back into here. The other potential is that we continue to reaccumulate, generating liquidity, potentially put in some form of short-term SMT off this high, as ES is quite diverged and has been trading much higher, leaving a decent bit of LRL through this leg. We could potentially reaccumulate, manipulate all the way back down, sweeping these relative equal lows inside of our regular trading hours gap and then redistributing higher. You have to think of these gaps as imbalances or fair value gaps in a sense. So because we also have this one right here overlapping with this one, we're likely to get a decent bit of reaccumulation through these areas. We're going to fill these inefficiencies. Like this area right through here where we've had no real body closure over any of this area, this will likely be revisited. And the same thing applies over here. We don't even have a wick inside of this imbalance right here. This is showing to me that this is going to be a prominent draw as we have our stacked relative equal highs inside of this regular trading hours gap. Meaning that if we're putting prominent SMTs off these highs on ES, I would be reluctant to see this high taken and more so just be looking for these relative equal highs inside of our regular trading hours gap. That's a bit of extra sauce for you guys. I hope this helps. And let me know what you'd like to see next in the comment section. And for those of you who stayed past the outro, here's the final thing that I'll be looking for. So in this case, we also have this regular trading hours gap right here that aligns with our 5-minute rejection block over here. That was the same wick as that 15-minute rejection block that I showed. I just like to use 5-minute rejection blocks as they give me a little bit more precision. So these are the levels that I'm going to be looking at for Monday and the coming week. Let me know how you find these levels and mark them out in your trading throughout the week.